market has come off the boil, pulled back from its highs, and there's a bit of doubt in the air for the first time this year. Gary Glover is looking at the distribution days, the technicals over the indices, and a bit of reflection on history to help guide us through, as well as this week's shares that he's been shortlisted for trading and looking at the setups. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
We know that we can always rely on your studies of history to help us through and understand where the market has been in the past and sort of pull some statistics out, which you've done a great job of for the last few years. If we look at the market at the moment, you've said for some time it's kind of rare to get this kind of run. You said rallied hard for 18 to 19 weeks, and there's very few times we can draw from history to pull out the data, which in a sense says kind of the market doesn't go too hard, too long like this. We've kind of tipped over a little bit. Can you kind of give us a bit of a background on the history, but also more importantly, the distribution days that you're highlighting, what they are and why they're important at this part of the market?
Yeah, look, in terms of percentage moves and stuff there, we're definitely up in the rare air, obviously 18, 19 weeks, and we've got 25 to 30% rallies in some of these indices. So that's sort of out of the box. That's pretty excessive there. So not many, have sort of run that long and that hard in that short period of time without any cool off there. I think not many really go past about 15, 16 weeks, Chris, as well. So only a handful there. So that gives you an indication of how strong this market has been in a short period of time there. Not too many sort of corrections throughout that period. We do know that when we see a cluster of distribution days, so that is sort of down days, where we're sort of usually 0.1, 0.2% lower than the previous day on heavier volumes. So to see one or two is not uncommon there. But when you see say a cluster of like 4 or 5 within a 2-week period, that's often a bit of a pretty negative sign there. So we've definitely seen a cluster of 4 or 5 in the last 2 weeks there across a lot of the indices there. So that's really the first negative we've seen for quite a while there. And we are sort of, apart from being a bit long on the tooth there, we have started to sort of fade off from the top line, and we're doing a lot of testing of the bottom line here recently as well. So we're getting a few more touches along the bottom side here. So just a bit vulnerable here. We're sort of, so far we've held it. Can still continue to go higher here, but definitely showing some sort of vulnerability. I think if we do crack the bottom of that channel line, that'll be viewed pretty negative there. I just, the question is, are we going to get sort of something short and sharp, sort of like a bit of a, not a relief rally, but a relief sell-off there, or are we going to get sort of something, like a corrective, time-consuming pullback there? We saw something like on the Nikkei, went up 5 weeks pretty quickly, rallied hard, then it pulled back for something like 18 weeks. Did a really time-consuming, drawn-out pullback. Had like a comeback in 3 waves as well. So it was really sort of more of a sideways, sort of downward move there. So that can happen there. Just feel like this sort of year here, like the election year, a bit more volatile than some other years. And normally the first quarter is pretty choppy here. So it's sort of unusual to actually have just the market go up slow and steady the whole first quarter. So not many sort of get this far without having pulled back. And they're probably the ones that have sort of run this far. If they have had a pullback, it's usually been a bit of a quick release. So, I'm probably worried now more that's going to might be choppy here for, not just a pullback to the old high and a reset and go again. We might get a little, I think it might have been 04 and 84, something like we had this other correction here, something like this ABC. So we had 3 sort of tests of the low. So we had a pullback, a rally, a pullback again to a new low, another rally, lower high, and then another new low as well. So what we sort of got through that July through to November period, we might get something like that again potentially. So which might bring us back to the old high. So that's an option there as well. So you will see a bit of a release, maybe a bit of a bounce again, bit of a release, another bounce again. So it'll be lot of indecision here. The environment is kind of right for that as well. If you're thinking about, we're still fighting the inflation side here. We've sort of got some belief that interest rates are going to be cut here. And markets do rally when rates are going to get cut as well. So I think that's going to be kicked down the road a bit longer here. But at some stage, that's going to come in here. But, the inflation fight hasn't been won yet. If anything, the CPI and the PPI figure are both a little bit higher there. Annualize those rates out, they're still pretty high. So history said that inflation does have a habit of sort of swelling back here. So that's on a bit negative there as well. So that might just draw this decline out a bit longer than first thought here, really. So, it just makes it a bit tricky. I think markets had a pretty run. I'll just be pretty cautious here.
Okay, so that's the NASDAQ, and we're going to see somewhat similarities within the S&P 500. You've got this channel. We're still getting touches sort of towards the lower end of it on the daily chart. It has stopped powering up higher and higher. It's sort of had that congestion. Talked about the distribution days. We've got a few here that cross over with the NASDAQ as well. Is that very much in the same sort of boat? Not much else to add to the...
Yeah, it's similar. The only difference there, this is sort of tightening up here. This is more of a rising wedge there. And probably, when you are rising up here like this and, tightening up as well, eventually it will break through there. So it is looking, vulnerable here for a downward break here. So after running here for quite a while, you normally sort of see that, initially at first move up, then the next move's a little bit less, and then, so you sort of do get that rounding appearance there. So you might get a little consolidation. It might take a bit of time, then it might roll off. So this top here might take a little while to sort of to round off there. Just lose momentum there and weaken off there. So when the Dow Jones is already sort of showing sort of signs of weakness as well. So that's quite interesting here that that one there sort of really sort of rolled off, sort of is hanging off, so steep first, less angle the second one, and then we're still staying under here at the moment. So, so oftentimes you can sort of see these sort of rounding tops here. But what that does is just to suggest that, it's probably going to be not an impulsive move down here, more of a rounding sort of nature. But you might get a leg down, but, another move back up again, another down here. So just might be volatile here for the next couple of months there. And maybe instead of getting a May low, maybe we might get a June or a July low or something. Just because we're going to have maybe 2 or 3 retests of the lows. So that's the other possibility. I mean, you'd much prefer just for it to correct quickly, get it out of the way, and then we build again and then pull market back on, and then it's easy trading. But we might just be getting it. We might get a pretty messy, like an ABCDE, so like a 5-wave sort of corrected pattern, which might make it a bit tricky to trade here, tricky period. So what that will probably mean is you're probably going to really look at the sector sort of stuff really closely there and just be in the sectors, that are holding up there.
Well, that's a good point. And we won't jump into those trading shares just yet, because no doubt you've been pulling apart the leading sectors and finding the best opportunities on the market in this current state of play. We do just want to look at the Aussie market first. So you have noted for a long time, it's been dancing to a different beat drum. We've got quite a heavy week. So the other charts you've shown for the US indices have been on the daily. We've got the weekly here for the Aussie. That's the overhead resistance that we've been looking at for about a year now more.
Yeah.
And we cracked out, got over the other side, but we've got a heavy candle, black candle. It opened higher, closed lower, exceeded the range of the week before, almost 2 weeks. How do you see this behaviour on the Aussie market and the volumes that came with it? How do you see that displaying the current nature of the Aussie?
It's funny. It's broken a lot of rules here. The ASX 200 there. I mean, like normally when you have sort of 3 attempts for high, the 4th attempt will only, that's like Dan always said, you go through on the 4th attempt, but the 4th attempt didn't go through, came back and actually went for 5th attempt. 5th attempt actually pulled back, and then it was actually the 6th attempt that actually went through. So that's pretty rare. And to be with being definitely a laggard too compared to most other indices, haven't really got going and really broke through. And then last week we've had a pretty sharp downward move here on pretty aggressive volume as well. So that kind of throws the sort of strength of this move back, in our faces a bit as well. So that's a little bit uncertainty here. So hasn't sort of abided by a lot of the technical rules so far, the ASX 200 there. So just that selling there just maybe suggests to me, you know, maybe we'll come back to something like 70, 400, come back to that old, maybe the mid 23 high or something there, and maybe find support there and build there. So it's been pretty messy for a while here now. Maybe we're trying to unmessy this thing, which has been pretty messy, is not going to happen here. But look, it was interesting. I thought we might have gone a bit further up here, but the reaction last week, pretty decent volume there. Does suggest, maybe it might grind back here, but we've had lots of overlapping moves in this trend so far, broken a few rules there. So I guess what has sort of stood up so far is just looking at the technical levels, Chris, on the index as well. We've seen a few bounce off sort of some of the old highs and lows, like obviously the 6751 came back and retest the old low. Previous to that was sort of bouncing off that sort of, I think 6950 zone was a previous level, so bounced off there a couple of times. So we're probably just going to be almost better off actually looking for key sort of technical support levels on the index. So not that we want to trade the index too much, but that's probably been a better guideline here so far for the ASX 200 there. So I think maybe something back to 7400 there does look like more of an interesting sort of support zone there. But I think they're probably looking at the stocks is probably going to be more important than looking at the index, particularly the ASX 200.
Well, that's a good prompt for us to move on down to the next part of your weekly report, which we've got kicking off with a large name, Woolworths, the grocer that we all know well. What we're seeing down here is retouching these lows, spending a bit of time after a massive drop during reporting season. We've got sort of the volatility tightening up, and sort of, as you've talked about the lows on the indices, it's sort of retesting these lows here and doing it with dramatic volume. So what happens here? You've also got this ominous box highlighted. So walk us through what you'll see on this chart.
Oh, the ominous box was sort of, that was the old 50% on the weekly pullback there. So when this was sort of aggressively coming up, I thought, maybe that might be where it shoots down to. But then the last 3 or 4 weeks there, we've held up here, around that sort of 3250 zone, which is sort of a bit of a key support zone previously there. So we've seen recently, not all the stocks are going to new lows there. Some of them are sort of just coming back and retesting old lows, finding support there. So I do like the fact that we're sort of seeing elevated volumes here the last probably 3 weeks there. So that does looks like accumulation to me taking place at those sort of lower levels there. And we're 20% up the highs here for Woolworths as well. So that's a pretty big move for, staple, sort of fairly safe, sort of business there. So yeah, might have had a little bit of a sweet run through COVID and stuff there, but still a sort of quality company there. I know there's a bit of noise around the price gouging stuff there, but the reality is sort of, Woolies and Coles make up about 65% of that market. It's sort of going to be hard for anyone to penetrate that, and if it does get opened up a little bit, it's going to be years before there's any difference made in there at all. So I think the reality is there's a lot of negative noise, Chris, there. I don't see too much changing in the business itself. So, another leader's probably just going to follow the status quo there. So I think, this looks pretty interesting to me. I like the price action here at the moment. Seem to be some sort of heavier volume days where it's sort of bouncing as well, pulling back, starting to have some lighter days on the down moves there. So, it looks pretty interesting, mate. Yeah. I don't think it's going to come back to 3050. I think this 3250 level looks more, compelled to hold it.
Look, we stick with other large cap names. You've got South32, the spin-off from BHP a couple of years ago. South32, looking at this, you've got the weekly chart that you've shown us. You've got a massive rally, so coming out of COVID lows, pushing up really high. We've had this pullback, and well, it's quite significant. What I'm noting is that we've got 0 for the high, 100 for the low, so that's the percentage range. And then these blue lines on the left, or these blue numbers, show the Fibonacci retracements, 61.8 and 66. That's kind of the region that we're in here. So is that part of what you're looking at?
Yeah, I mean, look, the key thing there is that red box there, the size of that box is basically a projection off the first high down. So normally when you go through a bit of a corrective phase, we're looking for that sort of A, B, C And A equals C is probably the most common corrective pattern we'll see in most markets there. So the first leg down, you project the size of that, you get your next leg down. So we've actually fulfilled that sort of target there, and probably gone just marginally lower there. The other thing we've done, of course, is used up plenty of time as well. So that, in terms of the correction size there, it's probably, at least 1.6 to 2.6 times the first leg in time as well, which is, time is very, little, not well understood by most people there. But, oftentimes, we need, when stocks go through a corrective phase, then people looking at Elliott wave and different theories, they see certain ways and stuff there. They think, oh, we've hit the target there. But oftentimes it really needs a lot more time there. You need to actually measure out. And the corrective process can take a lot longer than the rallies as well. So it's important to sort of see a lot of time used up in those corrective. And there's different formulas and ratios that they look for in those pullbacks. So this has definitely sort of met a lot of those targets there and used up a lot of time here. And now we're sort of, as you quite rightly pointed out there, we've sort of come back around 2/3 of that range as well. So it's used up plenty of time here. It's come back pretty deep. Classic ABC here. And now we're starting to see a bit of volume increase at the lows here. So we're seeing signs of accumulation taking place for S32. And if you drill into the daily there, which you won't see here, but I go and look at it yourself there, you're starting to see, nice washout absorption low. We're seeing a first high low, second high low. So starting to see a building process there. So this is, the whole idea around that 0, 1, 2, 3 pattern, Chris, is that we're not just jumping in and buying what we think is the low. We're actually starting to see signs of a building process starting to begin. So starting to see a series of high lows first before we jump in there. So, if we start to see sort of a few high lows sort of set up there, it just gives us a bit more confidence to come in there. And it will probably stop you from jumping in too early and catching that falling knife, which is obviously one of the great phrases in the market there. So, we're seeing some good signs there. We're seeing here with like IGO and a few of the other diversified, we're seeing some of the lithium names also start to sort of rally here as well. So it does look pretty good for S32 here. Just look at all the early signs here of a bit of a basing pattern here. Got a nice measured move, got volume coming in, signs of accumulation. So we've got all the right early signs of a building of a low here and then a building process there. So, but yeah, if we see that sort of third high low in there, that's going to be for me, that's going to be the sort of killer. Not killer blow, but that's going to be the killer confirmation there that this thing's it's building nicely and ready to go higher. So I think we're seeing probably 80% of all the ingredients you want to see here. We're just going to see a couple more to confirm more upside there.
Right. Well, sticking with some of the bigger names, we moved to one that was more of a recent IPO in the last few years, Pexagroup, which was quite a large one for its time. It has slipped back. So we've got 22 highs here right at the start of 22, fallen down throughout to 23. 23 seems to have been less volatility, but still slipped down those October lows and then rallied somewhat with a bit of a pullback, consolidation just around those lows. And then it's taken off with the rest of the market. But what do you see happening here with PEXA?
Yeah, so we got our sort of false break there, went to a new low and then reversed there and had a bit of a rally, came back up to the top of that sort of price sort of band there. And then we pulled back to the sort of the false break zone, the old low, made a first high lower there, and then we've sort of seen another leg high here. What's probably most interesting here is the volume through that leg's been pretty solid. There's some pretty robust, and even actually breaking through the upper channel line there, the volume's been pretty firm as well. So yeah, some really good signs there actually that market's getting more confident with its stock here. Oftentimes you might see a little bit of a break here and maybe the volume depletes and then you see a bit of a like a 1 week move and then a reversal down here, but we haven't seen that here. We're seeing it's been pretty robust here, hanging on pretty tight here, showing strength there. So does look pretty solid there for PEXA as well. So yeah, in a tape which is probably looking a bit weak here, this looks pretty strong.
Right. Well, one that has been a market leader and then had a different story after that. We can see the massive rallies where we're recovering it as momentum leader and market leader. It's been through a bit of pain, fallen from 44 down towards the 14 area. But we've got FB, which is the lovely thing that we see on your charts when you mark them up. Yeah. We had the low here, wait through a bit of time, and what happened?
Yeah, so the company sort of has reported pretty well actually, really, but there's been obviously just some pretty strong selling on the stock here. So the company's put out a few newsletters there, sort of trying to confirm its outlook. And look, it's a pretty well managed biotech there. Been profitable for about 4 or 5 years now. Do watch the purse strings really tightly there. Maybe just not sexy enough. Obviously, everyone's looking for a little bit more risk and a little bit more return, maybe. But has felt like there's been a bit of a seller here. But the company, the company's got plenty of cash as well. So they didn't, there was a bit of query there recently around only paying a pretty small dividend when there's quite a pretty heavy cash reserves there. They've been pretty profitable for quite a few years. So, I know some larger shareholders there were asking about whether buyback or a larger dividend return, considering this been pretty well managed. But the stock went to a new low. Then obviously they did announce they'll actually start buying back some of their shares. And then we saw we're seeing some pretty heavy days up there. I think we saw 2 of the 3 heaviest days of the year after that announcement there. So combine that with going to a new low false break and getting a bit of a shift from the company there. I think that's pretty positive there. So I think it looks pretty good here actually. Again, in a tape which is probably hard to find opportunities here. This one does look quite good. I like the fact that it's come back to a new low. The company's finally bending a little bit towards sort of shareholders. I guess if you remember BHP and Rio weren't paying out the large dividends. Well, all the shareholders were saying we want some bigger dividends. So company expanded and the shareholders are happy, and then the share price performs here. So sometimes it's not that tricky. So I think it's a good sign here actually. So I think this one here looks pretty good.
Okay, well, there's a couple more in the report to move into, which we've got Region Group, RGN is a ticker. We've got what we're loving to see here on this weekly report, on this weekly chart, I should say. We get a chance for you to walk us through the 0, 1, 2, 3 that you referenced before. So 0, 1, 2, 3, 3 consecutive higher lows after it's made what is hopefully the ultimate low in this move. How do you interpret what's going on here? What are the markers that you look for? And you said sort of you don't go in there and catch the falling knife. You wait for these moves.
Yeah, look, it's a bit of a base building characteristic. Look, we do know that most sort of counter moves are usually 3 wave spreads. So, in an uptrend, we see pull back a little ABC, and then we continue on the way up again. That's the most common correction there. So, if you're in a downtrend and you have a little 3-wave rally, then the downward trend can continue. But if you start to see, 2 or 3 high lows there, then that sort of cancels out the little 3-wave rally there. Just shows you that it's struggling to go down as well, and then seeing those sort of high lows in place, it just sort of gives you a bit more cover. Every time it's pulling back, it's getting shallower and shallower. So that can be coming up a deeper low there, but oftentimes these base buildings takes a bit of time to occur here. We see, if you go back and look at some of the best stocks, they do all the hard work in the first half of their life, and then the second half is really all the fast moves there. So if we can avoid which part do we want to be in? Do we want to be in the choppy early hard working stage where not much gains is made, or do we want to be coming in the second half where all the performances have made here? So I know which one I want to be in. So just the right sort of characteristics there, sort of building there. So just seeing that sort of third high low here now, we're seeing really good volume coming up on the upward drives as well, Chris, and then the volume drying up. Look, you can see how low the volume was on that sort of second pullback there, really tight. Even the third one, he was quite light. And in the last couple of weeks, what I was seeing, he was seeing the volume jump in here on this sort of third high low here. So volume profile looks pretty good here. So interesting. A couple of these REITs actually looking pretty good to me. So Is that, so it's interesting there. Is that one of the riskiest sectors coming to life at the end of this bullish phase, or is this a change in the economy and, what's happening in that sector there? So I'm not sure which one it is. But I still like the signs here. Does look pretty good there. But maybe there's probably assets are undervalued there. If you go back and look at inflationary periods there, I think in the 70s there, I think property average 9.5% or 9% growth throughout that period. So might have been, inflation might have been 7%, and the growth might have been 9.5%. So it's only net 2.5% there. But if you're not long those assets, you're
getting left behind.
Yeah, you're probably paying rent for about 11%. So. That's history tells you're going to be long assets in high inflation periods. So, so it does look pretty interesting to me. Looks pretty solid.
Well, the last one on this week's list is Growthpoint property. So GOZ's a ticker. Similar sort of thing. It's been quite heavy on the weekly chart. It has had that long downtrend. Not quite a 0, 1, 2, 3, but we do have like this bit of a consolidation going on here. Maybe if I'm going to use your vernacular previously, impulsive move and corrective in time. The better volumes on the way out, and then obviously pretty light on the pullback. The only thing we didn't see was, if this was like a bit of a third wave, we normally would want to see pretty big volume come in here. So we should have seen probably slightly heavier there. We saw, with the last stock there, we definitely saw heavier volumes come in there. So we saw some bigger jumps there. So it doesn't look quite as good as the last one. It's still positive there. But probably like to see some heavier volume come in here just to give this this rally some legs here. If the lighter volume doesn't come in, then maybe this is just a little ABC. So constructive in the short term anyway. Well, it's nice to see that there are opportunities in the market when we are seeing possibly rollover, distribution days coming through, and the indices in a bit of doubt, particularly if we look at it from the historical lens and see, well, how many times has it rallied this far in this amount of time? There's a lot of unknown territory there, uncharted waters. So it's great to have your guidance on what the indices are doing, how they behave, and what we can look at for opportunities in the market. So
look, I think might get me wrong here, Chris. I mean, obviously, the market keep going up here, but we've had some phenomenal gains here, like 30% gains in the Nasdaq and 26% gains in the S&P in 18, 19 weeks. So just that is a big move in a short period of time here. So that alone, regardless of any chart here, that should have you somewhat a little bit cautious about what sort of gains have been made here in a short period of time. So at the very worst thing, we should go through a bit of a pause, see a bit of a sideways, corrective phase. Yeah, I think more likely. I think we're going to sort of see like a massive pullback there, something a bit sharper, but then like a little, come back in an overlapping sort of corrective phase there. We might last 2 or 3 months here. So that's what I think might occur. You could get your little short release here, maybe come back 8% in a short period of time, come back and retest the old high, and then we go again. That'd be nice. I just don't see that. Using up 18 weeks, moving slowly, I don't see that either. I think it's going to be a little bit more volatile here, and a bit more overlapping in nature. There you go. It's a bit of indecision around here. Still got money on the sidelines looking to come in. Some of the flows still coming in. It's still pretty heavy. It's sort of, I noticed that we do have those classic high funds flows coming out of the top, Chris, like FOMO. So there's some big spikes of flow money has just come in the last week or two in the US indices, which is classic, get me in at the top sort of behaviour. So I think we're just going to see a bit of a corrective phase yet. So Okay,
well, that may be out of us, but we will come back to you for guidance for the weeks ahead. We'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.